And taking a look at the U.S. futures quickly, you can see the Dow and the S&P 500 pretty much a wash. NASDAQ is looking like it might be up 0.2. They're waiting some numbers down there, just like we were awaiting some numbers from Stats Canada, but we have them now, the November labor statistics. We're going to talk about those numbers right now, and they were up. Yeah, up by 54,000 to 0.3% in November, driven by gains in part-time work, though. The employment rate rose 0.1 percentage point to 60.9. Unemployment rate fell 0.4 to 6.5%. Here to help make sense of all this is Brendon Bernard, senior economist at Indeed. Brendon, thanks as always for joining us.
Thanks for having me.
Just looking at that, the numbers were higher than expected. They were actually, the survey had we were going to lose about 2.5K, and we gained 53,000 jobs, but a lot of part-time.
Yeah, I think the headline is what stands out for me. It's a big beat, large drop in the unemployment rate. And while part-time driving the increases does take a bit of the shine off it, when we look at some of the demographics driving the overall increase, youth were the big leader in today's job growth. And so that kind of makes a bit more sense than why part-time would be on the stronger side, because youth are more likely to be in part-time jobs. And it's definitely a positive story to see see a nice drop in the youth unemployment rate after several elevated years.
Yeah, I guess my question would be to see the overall unemployment rate drop as much as it did. I don't recall seeing a number drop that much in quite some time. Can you explain the drop? Going from 6.9 to 6.5, that to me is the big standout.
Yeah, well, any labor force survey, we got to take it with a grain of salt. The numbers have been quite volatile the past few months. We had these two large declines in the middle of Q3, and now a few. I think this is now three really positive months in a row. So, I think let's temper on like seeing this as a huge change in October, but definitely, a 3-month hot streak, seeing that, I think it's a sign that, the labor market has found at least a bit of a footing, cautious, but this is the first noticeable downtick over the past, these now 2 reports in a row where we saw the unemployment rate come down, where the situation does look a little different, where we've got to we'll have to go into the deeper into the numbers to evaluate what's going on. I think I both agree with you that a large move like this is a bit puzzling, but there does seem to be a little bit of a trend going on as well.
Is that, and I missed the first part. Someone was talking in my ear that the youth employment going up, is that partly because we've seen a reduction in foreign workers? Do you think?
There's some peculiarities there. The number of youth, at least estimated by StatsCan, who are working also jumped, which wouldn't get boosted by fewer youth being in the country. But that is a possibility. I think the surge in population that Canada experienced in 2022, 23, first half of 24, it did coincide with the deterioration of the youth job market. And so now that population growth has really come down to a halt, that could help youth on the margin land some work as well.
I just want to ask. Go ahead.
Just to put some numbers in it. So we had this 0.4 drop in the headline unemployment rate, 6.9 to 6.5. Among youth, we went from 14.1 to 12.8%. So over a full percentage point drop in the youth jobless rate in November.
Some welcome news. I just want to ask about the healthcare and social assistance sectors. What were they? What were the numbers there?
Yeah. So looking at the industry mix there, healthcare and social assistance the large driver of today's of job numbers, accounting for close to net. With an increase of about 55,000, 45.5 came from healthcare and social assistance. So not the widest breadth of industry job growth, though we saw some gains in a few other areas, natural resources and food services. And then these gains offset a noticeable decline in wholesale and retail trade. Manufacturing also slipped. So a mixed bag on the employment by industry front. Doesn't necessarily say the greatest thing about the strength of the labor market, that healthcare and social assistance is carrying the whole load for this month. And let me just check actually here. Let's see on the. Now, this was, though, a private sector month. So private sector employees up 52,000 of the 54,000 overall increase. So while healthcare and social assistance driving the headline, potentially more on the private sector side rather than public sector.
Okay.
I guess the main question we'll take from this is, I guess, what the Bank of Canada is going to do now. Will this now put them on hold, I guess, for their next meeting is the question I have. Are these numbers, they look great, the headline number, but will they, say, well, it's part-time, a lot of students getting jobs? Is this going to, put them on hold for the foreseeable future? I guess that's what all investors are going to wonder.
Yeah, I think when we see these stronger than expected numbers, what it does is then puts more weight on the inflation report, because when the numbers are coming in weak, that's a sign of and we know that there are other challenges looming facing the Canadian economy in terms of uncertainty that would potentially cause the Bank of Canada to lean cut. But when the job numbers, which are the first economic indicator we get, come in firm, well, then the bank can focus a bit on prices, and if the inflation situation shows some sign of stability, which I think the recent data has been relatively stable, then the impetus to cut from a weaker economic situation, well, we're not seeing that flashing red in the data. And then there you see it, the Canadian dollar jumping. I think it fits with the notion that now we can focus on inflation because the job market is stable for today, and that suggests more of a hold pattern than cut.
Okay, Brendon, thanks as always for joining us. We appreciate you breaking down the numbers.
Thanks for having me.
Brendon Bernard is senior economist at Indeed.